hosted by HDFC Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nilesh Ghuge from HDFC Securities. Thank you, and over to you, sir.
Thank you, Tanvi. Good afternoon, all. On behalf of HDFC Securities, I welcome everyone to this Alkyl Amines conference call to discuss the results for the quarter ended September 2022. It is pleasure of having with us top management team from Alkyl Amines, represented by Mr. Yogesh Kothari, Chairman and Managing Director, Mr. Kirat Patel, Executive Director, Mr. Chintamani, General Manager Legal and Company Secretary, Mr. K.P. Rajgopalan, Corporate Advisor, and Ms. Kanchan Shinde, Chief Financial Officer. Without further ado, I will now hand over the floor to the management for making the opening comments. Over to you, sir.
Thank you, Nilesh, and thank you all the investors listening. I just want to start talk by saying that last few quarters were very challenging, and we hope that things will be better now. I will like to say that we have a few projects planned, and already some work has been done. One of them would be high capacity ethyl amines plant, which will be coming up by June 2023, and we expect that this will help us in our future sales and other things. We are also going to then utilize some of the plants which may be free after this new expansion, and new products which we are planning. Some of them may be done on the existing plants. I am quite confident that the new products which we are planning are likely to be positive for the company, and in future this will contribute a large amount to the company. This last few quarters were a little bit challenging, mainly because pharma industry in India was going through a dull phase, I would say, as well as several of our raw materials and our main utility, coal, had substantially, they had seen a substantial price increase. Some of the raw materials have started coming down, however, some are still at the high rates. Adding to this, of course, is the conflict in Europe, which is going on, and that has added to several cost increases in some areas. I think I will now investors can ask questions now. If any things are there, please let us know.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav Chimodia from Anvil Research. Please go ahead.
Yeah, good afternoon, team. So I have 2-3 questions to ask. So first, on your opening remarks, you mentioned that the new products could substantially increase our turnover going forward, and for which we may be planning to put up around 25,000 to 30,000 tons of capacity. So if you can just elaborate on in terms of the opportunity size of the number of products which we are planning to put up? And are these import substitute products or are they meant for the export market?
Well, let me say that this new capacity which we'll be adding would be for some new products which would be largely import substitution, and these are developed within our R&D, and they are at a stage where they will be commercialized in the next few months as well as maybe in a year's time. Some of them are derivatives of the amines, but mainly most of them are new products.
Okay.
And our current expansion which is going on will be on ethyl amines. That will be finished by May, June next year.
Correct. So, sir, in terms of the opportunity size, in terms of the sales potential of each of these products, not today, but whenever they will be fully utilized, how much could be the sales potential of the products which we are going to introduce from the expansion what we have announced very recently?
Analysts is Kirat Patel. The sales potential at full capacity of these products, of course, the market opportunity is much bigger, but what buys as our market share, say 3-4 years down the line when full usage of our assets is being made, would be between 600 to 800 crores on the top line.
Correct. And are these products similar to our existing user profiles in terms of pharma, agro, or these products are developed for some newer user industries?
Largely, it's the market is the same as pharma. This thing. But there are a range. It's a range of products, so there are different users for different, but the same industry which we now supply.
Correct. Sir, my second question is in past of one of our annual reports, previous some 13-14 years back. So when I was going and reading them, one of the key issues which we were facing earlier was the power cost. Of course, it was internal to us, and then we gradually improved and reduced our per ton consumption also. So, currently, when in our board meetings and discussions, what do you feel, Palab? Do you feel that are there any such other costs where there is a scope for improvement, or some of the key intermediates which currently we are buying from the outside world and could be added through process innovation in our product portfolio, which could help us to improve the margins further? So, which again could be internal to us in terms of cost efficiency as well as including the intermediates to our finished products.
See, what we are doing now is we are adding up solar capacity, which will be definitely a lot of saving in the electricity costs.
Okay.
Our coal requirement is mainly for generation of steam, which is one of our main inputs.
Okay.
So that is something which we are not able to cut down. We have to use the high temperature in the boilers to use turbine to make more power.
Okay.
In this way, that will also contribute to our bringing down the cost of power.
Correct. But sir, are we adding any or thinking of putting up some of the key intermediates which currently we may be not producing or buying from the outside world, which could help us in improving our process side innovation? Because product side you mentioned, we have been already introducing the products, which are some of them are import substitutes, so that would be taken care of. But are we also planning to put up some of the intermediate lines along with this, something of that sort, and understanding from that point of view?
I tell you, the raw materials which we use are mainly various ammonia and similar types of products. Now, these are produced in large plants, and we don't have intentions in going into these type of plants because that's not our expertise.
Correct.
And there are many plants all around the world from whom we can buy this. Ammonia, of course, is a separate thing because most of it is imported from abroad, and some is made for fertilizer industry in India. And actually, the ammonia prices have really hit us in quite a significant way. We only hope that this conflict in Europe gets over fast because that is to some extent driving the cost from it.
Got it, sir. Sir, and the last question to this is, do we still maintain our long-term volume growth of 15% CAGR for next 5-6 years, which we have been earlier indicating, or do we want to change that guidance based on the Q2 numbers or probably the outlook of the disruptions going on at the global levels?
Yes. So at the last con call, we had indicated that we look at on long term this thing of 10 to 15% growth, which we have more or less achieved in the last 10 years. However, this year I don't think we will be able to. We may be on the lower side of this estimate, and it looks a bit of a struggle given the environment right now. So. Yes, it will definitely be a struggle for this year. But I think as things settle down, we can go back to that 10% to 15% growth rate in volume.
Got it.
Especially with new products coming in and, the old products also having organic growth.
Correct. And so this Europe, what you told about in your opening remarks, the disruption going on, amines is predominantly produced in Europe also. So could that throw us an opportunity to get some additional volumes if the disruption sustains for a longer period of time? Could those volumes which are currently being produced by Europe come to us, and thereby we can capitalize on those volumes and fill up our capacities faster than expected? Do you sense those sort of opportunities?
Well, we do not see too many opportunities like that. But there is always a possibility if the conflict drags on for more time.
Correct. Okay, sir. Thanks for answering the questions in detail. I join back in the queue.
Thank you. Participants, if you wish to ask any questions, please enter star and 1 on your phone. The next question is from the line of Poojan Shah from Congruence Advisors. Please go ahead.
Hi, sir. Am I audible?
Yes.
Yeah. So my first question would be on aliphatic amines, which is we have investment around 400 crores, and we would be around I was reading the annual report and saying we would be commissioning next 10 years. So could you just share your progress on that part for that?
As Yogesh mentioned a little earlier, the 400 crore aliphatic amines plant coming up in Kurkum will be commissioned somewhere May and June of the year 2023, which is say about 6 to 8 months from now. And we are already mechanical completion is planned around April. So we are on schedule more or less and well within the budget.
Okay, sir. So the Dahej plant, which we have been commissioned and been planning to get onto the route in March 23, is it on the streamline, or it's been some early stage on, or
No. The Dahej plant, amines plant. The Kurkum plant is a ethylamines plant. C2.
Okay. And my second question would be, what is the current utilization if we are operating because of this pharma scenario, and how, as we have been reading on the US structure has been destocking currently now, and pharma is getting now some traction onto their product. So how you have been facing your order book, and how you are seeing this next H2 for your specific company?
So if I get it right, you're asking how is the pharma industry's difficulties affecting us? Is that the question?
No. My question would be: is the pharma industry is currently now being like the pain is behind us right now. So as we are reading in the pharma sector, so are we seeing a better traction for H2 compared to H1? And what are the scenarios probably which would increase? Like, is it for H2 or we have been eyeing for FY24 then?
So yes, I got. You see, the pharma sector had three problems related to it. One was an inventory build-up, one was difficulties in export, and the other was a supply chain issue with China. Yes, they all are saying that slowly it is getting sorted out, and they hope to do better in the second half. And we are also hoping that they will in the second half, as they say. In which case, we are, of course, very positive about the outcome. But, there are always some unexpected things that happen. So we must put some kind of cautionary note on that. Hopefully, the pharma industry has sorted out its problem.
Okay. And
the exports and the supply chain issues may, recur. That's
yeah. And what will be the current utilization as like the scenario is a bit of a sluggish?
The current utilization of our plants?
Yes.
We have about 15 plants, and there are some working at full capacity and some at reduced capacity. But on the whole, I would say we would be about 70%. But we keep adding capacities because there are specific products and specific items which there is a shortage, and there's something else where we are having capacity with a demand situation. But yes, on the whole, overall, for the company, maybe between 70-80% capacity utilization. We do have headroom in most products.
Okay. And sir, for the agrochemical, if you can share the industry view and your position in that part, how is the industry going on currently?
Well, as far as agrochemical industry is in India, they appear to be doing quite well, largely because of the need within India as well as for the export markets. And some are, of course, herbicides, some are pesticides. So depending on the product, some of the amines do go into that. Like for glyphosate, our isopropylamine goes, which itself is quite a decent value. And in many other agrochemicals, our products are going. So hopefully that remains, it continues like that. And some new capacities also might be coming up, which will help us,
Okay, sir. All the best. Thank you.
Thank you.
Thank you. The next question is from the line of Harsh Shah from Marcellus. Please go ahead.
Hello. Am I audible?
Yes, Harsh. Go ahead, Harsh.
Yeah. The question on the pharma side, incrementally, quarter on quarter, we have seen quite a bit of decline in the top line. However, in the pharma side, the issues around export issues and supply chain issues, they have only improved in this quarter compared to Q1. So in that context, why are we seeing such a sharp decline in the top line?
Top line decline is largely value driven, not volume driven. There's been a drop in prices because even some of the raw materials have stabilized and reduced, and partly, of course, competition.
So can you give us some numbers around the volume growth for Q2 as well as for H1?
We don't specific volume, but volume has been more or less flat. We don't discuss exact numbers.
Okay. And for H1 FY22, that is last year, are the numbers also higher because we are supplying for some COVID-related drugs which we are not supplying right now?
See, What I was referring to volumes being under stress is quarter to quarter, while over the half compared to last year, as you are referring to, there is a growth. And in spite of the fact that there were some products which we were supplying for COVID-related medicines, which are no longer there, and the pharma industry is getting back to what you might call normal, But they have had inventories which they have to run down.
Okay. So, could you be able to quantify volume growth in H1 year on year?
No, we don't actually put the numbers. We just give you an indication of the growth. So, the growth H1 to comparable half years, there has been a growth. About 1/3 of the growth in the top line is volume and about 2 is price.
Okay. Yeah. Thank you.
Thank you. Participants, if you wish to ask any questions, please enter star and 1. The next question is from the line of Rajiv Rupani, individual investor. Please go ahead.
Yeah, good afternoon, sir. I have a question. My first question is, apart from ethyl amines, so you have said that you are adding new products on specialty chemicals and amine derivatives. So could you give us the names of the products, please?
We do not disclose the new product names, but one of them would be one of them is likely to start sometime by end of this year. So, it's a new product. It's not made from any amine or anything. So this will be known only, it will be known in market, start the production and start selling.
Okay. And my next question is on ethylamine and methylamine. So what is our existing capacity of methylamine and how much are we adding? And how much is the capacity of ethylamine and how much are we adding in the current expansion?
Okay, this question they've answered about 6 months ago, but I'll repeat it. In ethylamines, we do have a capacity, dedicated capacity in Kurkuma of about 50 tons per day. And there is a plant in Patalganga which is also capable of making ethylamines, which is at 25 tons a day. But that plant is a multi-purpose plant because it also makes methylamines. Because the Dahej plant in Dahej makes methylamines of about 150 tons a day. And the Patalganga plant is capable of meeting the methylamines of 50 tons a day. So you have overall capacity of approximately 200 tons per day of methylamines and 75 tons a day of ethylamines. But within that, there is a commonality between the Patalganga plant. If you use it for one, you can't use it for the other. Have I answered the question?
And how much are we adding now, ethylamine?
We are adding ethylamines of 100 tons per day. So the cooking plant of 50 tons per day will become free for other products, where one of the new products is going to be made, after some modifications, of course.
We will be adding a new methylamine plant after some time.
Okay, got it. That was helpful. My other question was regarding DMF. Now our competitor is producing DMF. So do we have any plans of producing DMF? And tetrahydrofuran?
In principle, we do have a plan. We will be making it also after some time.
Sorry, sir, can you repeat?
One of the projects which we have in mind, you may have seen our EC application, and this is one of the listed products where we have in mind. At some stage, perhaps we will get into making dimethyl formamide. Okay. There are views on raw material and things like that, but we'll probably make it.
Okay. And my last question was on ACN, acetonitrile. What is the current outlook on the prices of ACN, and what is the total capacity right now?
As mentioned earlier, we have now 2 plants of acetonitrile, one in Kurkum, the plant which we had here, and recently last year we commissioned the plant in Dahej. The Kurkum plant is about 12,000 tons capacity, and the Dahej plant is about 16 to 18,000 tons capacity. So between the two, we have about anywhere between 28 to 30,000 tons capacity.
Okay, and the outlook on prices?
The prices have been reasonably steady. I mean, there was a little pressure about a quarter ago, but that seems to be easing off. Of course, it's not prices which prevailed a little earlier, a year and a half ago or something, but they're easing on.
Okay, thank you.
For the raw material, acetic acid has been a little stable and has come down to reasonable levels.
Thank you. That's all my side.
Thank you. The next question is from the line of Jaiveer Shekhawat from Ambit Capital. Please go ahead.
Good afternoon, everyone. So firstly, the question on the capacity expansion that you're undertaking. Could you specify the overall domestic demand for the new products, the imports that are coming into the market, and if you would be the sole manufacturer in India for these products?
Let's start with the first one, which we have already talked about, Alkyl Amines plant, which is coming up. That is a well-known market, already domestic. A bit of the product will go to export markets, but that is not a significant part. We were running out of capacity of Alkyl Amines and Alkyl Amines, so we had to expand, and we have put up this plant. There's a steady growth in the Alkyl Amines market, and we hope it will continue to grow because on the back of the pharma doing well. The other 5 products, we have planned capacities, aggregating between 25 to 30,000 tons, which may take a little time to kind of get into this market. The markets are both domestic and exports. 1 or 2 products are export oriented, and the others are domestically focused. So it is going to take us time, and they are going to be launched from, as Mr. Kothari said, from maybe December this year, the first one, and rolled out over the next 18 to 24 months. For every quarter or 6 months, 1 or 2 products. And we will talk about the products once they are in the market.
Understood. And so what kind of ramp up are you looking, what kind of gives you the confidence to ramp up capacity utilization for these new specialty chemical and amine derivatives products that you look to launch?
We choose products where there are no more than 1 or 2 people who are making it. We would like to be among the top 3 product producers in the world. So we choose some specialties and amine products. And of course, in the domestic this thing, there is, as you know, that there is in the amines and the derivatives and the specialties, there are hardly any players.
Sure. And sir, on the top line growth itself, what we have seen is even your competitor has seen pressure on their top lines. So is it because of the competitor that we have to also pass on the benefit to the end users because we have seen the RM price correction?
Yes, you have. You're right, because who decides the price? As we keep saying, the price is decided by the market, and the market is decided by the competition. So it's very rare that unless you're a monopoly, you will get the chance to decide this. So you're right, it's the competition which is deciding the price.
Right, because sir, what I remember is even in say prior calls, what the management had guided for is that probably they may not look to pass on the entire benefit to the end users, given the RM brunt was not passed on to the end users. So is there a change that's happening over there?
There is, as you can see, the capacities are there in the country. The markets has not grown as fast as expected in some of these products. So there are going to be pressures until the markets catch up.
Sure.
it always follows a kind of a wave function, Sometimes it gets very tight and sometimes it's, you have a long situation.
Understood. Thanks a lot, sir.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, in the second half, how do we see the margin trajectory panning out?
Well, it's a bit difficult to predict the market margin, this thing, but being able to defend a certain set of margins. Of course, a couple of years ago, we had enjoyed a very wide increase in margins, and we are now back to normals. And I think the margins is something which we'll be able to probably defend because what we have in terms of raw materials and finished good prices are comparisons of the same consequence. So, and hopefully, sensibly, the market will settle to a reasonable price and cost equation. But it's very difficult to predict what tomorrow's margins are going to be. As you can see, that it's difficult to predict even the cost of the largest commodity in the world, oil.
Yes, sir. Understood. Sir, second is just a clarification on this recently announced expansion. You mentioned revenue potential as 700 to 800 crores. Am I correct?
That is for the new products, not including ethyl amines. The other new 5-6 products which we are launching over the next 24 months.
Okay, so that is the market opportunity, or are we saying the revenue?
No, the market opportunity is greater. This is what we think we will be able to capture.
Okay, sir. Okay. That's it from my side. Thank you very much.
Thank you. The next question is from the line of Nirav Jimodia from Anvil Research. Please go ahead.
Yeah, thanks for the follow-up, sir. So, if you can let us know, like in terms of how many new products we have introduced on the derivatives and the specialty side over last 5 years through our product team, and if you can highlight, like in terms of its sales contribution, has those products contributing currently 4 to 5% of our sales? So, does some of the products what we have introduced over last 5-6 years have now been contributing around 4 to 5% of our sales? So, have those products matured to that level?
Nirav, I don't have the exact numbers, but if I look at a slightly longer period, a 10-year period, those products which we have launched in that period definitely contributing both top line and bottom line quite a large amount. Of course, there has been the last 3-4 years we haven't launched too many new products. In fact, I can think of hardly any. But earlier than that we had launched. And going forward, these 5-6 products is likely to be adding maybe almost maybe 20-25% of our top line, significantly on the bottom line if markets hold up.
Correct. So, sir, generally when we introduce the products, what sort of payback periods we take into consideration? Because once we start introducing the products, then we try to capitalize, try to debottlenecking some of those products, and then those incremental volumes also start giving us those incremental turnovers. So what generally we think of a payback period when we sort of introduced 4-5 products at once as a basket of products in the market?
So for a new product, the kind of expectations on the paybacks are a little higher because the risks are higher.
Correct.
Before we, spend money on it. But an existing product, obviously the paybacks tend to be longer because we know the market and the risks are less. So we are satisfied with a longer payback. But if you look at maybe a 10-year period of our company or even the last 5 years, you'll find that our return on capital employed is about between 20 and 25%. And that is something the minimum we expect.
Got it, sir. Got it. So second question is on the acetonitrile. So if you can make us understand the market of acetonitrile in India and globally, what is it at currently?
Well, the Indian market was in and around about 28 to 30,000 tons last year. It seems to have not grown. In fact, it may have had a small degrowth because the pharma industry has had a problem. The international market size, it's a bit of a guess because there's no data available fully, but we expect to be over 100,000 to 120,000 tons.
Correct.
Probably more than that, maybe 150,000.
The special thing in acetonitrile is a lot of used material comes into India and people recycle it and use it, Even though the industries are not supposed to use, like the pharma industry and all, apparently some of them are using it, which is to some extent affecting tonnages. But it is something which is not going to stop. It will remain like that. So there is a lot of waste material available all around the world.
Got it, sir. And sir, last on just a small clarification in terms of our mother plant of ethyl amines, which is going to get commissioned next year. How much time generally it takes for us to achieve the full utilization of this plant before we again go for some debottlenecking or some addition to the existing capacity of 33,000 tons?
This is a little difficult question, because sometimes we go completely wrong. If you remember methyl amines, which we commissioned in 2017-18, and we had not expected to debottleneck it for another 5 years because we had gone from 50 to 100 tons.
Correct.
But within 3 years, we had to debottleneck it from 100 to 150 tons per day.
Correct.
So, but that may be kind of an outlier. But normally, one would expect the first debottlenecking exercise to come up with about 5 years to 7 years from the time you put up the plant.
Got it, sir. Got it. Thank you so much, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, please enter star and one. The next question is from the line of Pujan Shah from Congruence Advisors. Please go ahead.
Thanks for the follow-up, sir. One of my question would be in our new product side. So, how is the competitive intensity landscape if we are focusing on specifically on the Indian demand of our new products? And are we seeing any intervening from the government in specific of import tariff for this product, and that could be a more win advantage to our company?
Sorry, you're saying how will we be competitive in the new products?
Yeah. So competitive landscape for the new products. And the second is there any import tariff applicable for the new products, which could be a growth demand for consumption of domestic demand?
Well, the first question about competition as I mentioned earlier, when we do our shortlisting of new products, we try to see if there are not too many players in the field. And normally 2, 3, 4 people, especially in the specialty chemicals business, because it's a global thing. And therefore the competition is restricted because technologies are difficult. The other part about the import restrictions, no planning, or there are no such specific import restrictions which help us in the domestic market. We have to compete in the marketplace with all the normal tags.
Okay. Sir, my second question would be, might be a very basic question, but they wanted to understand is what is the product is being like, why our products are so efficient that the competitive is limited to 1 or 2 such companies, like we have been restricted to duopoly or monopoly of the companies. Are these product is been morely capex driven products, or like it's been economies of scale where you have been profitable if you achieve a break even minimum capacity utilization? So what makes this competition limited to each and every for this industry specific?
No, I think the issue is that why are we going into these products? First of all, we do a significant amount of work on it to develop a product after finding out the feasibility of the product. Then we look at our manufacturing expertise in some of the processes which are there. And if it helps us to use the expertise which we have in some of the processes, we try to see that by producing this new chemicals in a new plant maybe, but that would help us because we already have some of the experience. Our R&D is very strong. We try to make sure that what we develop comes to a level which would be competitive all around the world. So the cost part of it, of course, we do study it, otherwise we don't go into it. So we would go into products which is showing some decent amount of profitability. Then we plan all these new products.
Okay, sir. That is from my side. Thank you.
Thank you. As there are no further questions, I now hand the conference over to management for closing comments.
Okay, I think we had a very good interaction with people who wanted to know more about our products and all. Very confident that the new product which we are getting into will be very successful, and our company will do better in future. We had some issues because of the market conditions as well as the raw material costs being so high, but hopefully gradually this will also, the problems will also peter away. We hope that the pharma industry in India has a better positive upturn, both from their local sales as well as from their exports. Well, I think I want to thank everybody who has been listening to this, and I think that should be okay.
Thank you.
Thank you, everybody.
Thank you. On behalf of HDFC Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.